Ladies and gentlemen, good day and welcome to the Petronet LNG Limited Q2 FY24 earnings conference call hosted by Nirmal Bang Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand over the conference over to Mr. S. Ramesh from Nirmal Bang Equities. Thank you and over to you, sir.
Good evening and welcome to all of you. On behalf of Nirmal Bang Institutional Equities, it gives me pleasure to invite you to the 2Q FY24 earnings call hosted by the management of Petronet LNG Limited. Representing the company, we have Mr. Vinod Kumar Mishra, Director of Finance, Rakesh Chawla, Group General Manager and President Finance and Accounts, Jnanendra Kumar Sharma, Group General Manager and President Marketing, Mr. Vivek Mittal, Chief General Manager and Vice President Marketing, and Devabrata Satpathy, General Manager Finance and Accounts. So without much ado, let me invite the management to give their opening remarks. Over to you, sir.
Good evening to you. And this is second meeting this year of second quarter, and it has been very good. I would like to brief about that. If you see the throughput in the Dahej, it has been 210 TBTU as against 217 TBTU in the previous quarter and 182 TBTU in the corresponding quarter. Total throughput in the Dahej, total throughput of the Dahej and Kochi has been to the extent of 223 TBTU in the current quarter as compared to 230 TBTU in the corresponding previous quarter and 192 TBTU in the corresponding quarter. So throughput has been good, not so good, but revenues are fine, and we have done good job this time also. And if you see the throughput in first half of this year as compared to first half of the last year, the Dahej has performed 427 TBTU as against 378 TBTU in the previous year H1. So there has been a growth of around 13%. And if you see the quarterly results, there is 16% growth in throughput of this quarter as compared to corresponding quarter. And total throughput has been 453 TBTU in H1 as compared to 400 TBTU in the corresponding H1 of the previous year. And the profitability, as you see, has been 2 crores in this quarter as compared to 1,062 crore in the previous quarter and 994 crore in the corresponding quarter. And PAT has been 818 crore in this quarter as compared to 790 crores in the previous quarter and 744 crore in the corresponding quarter. So, and if you see the half-yearly result, the H1 PBT has been 2164 crores as compared to 1931 crore in the first half of last year. And PAT has been 1,608 crore in this first half as compared to first half of last year of 1,445 crores. So this has been the result, and if you see the growth, this is the highest ever PBT in H1 of any year so far in the history of Petronet LNG. And the growth of PBT and PAT in the current half has been 12%, 11% as compared to the corresponding half of the previous year. And similarly, the PBT and PAT has grown by 11%, 12% as compared to corresponding quarter of the previous year. And PBT and PAT has grown by 4% in this quarter as compared to previous quarter. So this has been, and further the Board of Directors has approved dividend of interim dividend of ₹7 per share. And you know that consistently company has been paying dividends of this 70% on the paid-up capital since many years. So I think a result is good. And apart from that, if you see, one more development has been there in this board meeting. Before that, I would just like to tell you that our utilization has been 93% of the terminal as compared to 96% in the previous quarter, and it was only 80% you see in the corresponding quarter of the last year. So there is good news, and perhaps this has been possible due to better utilization of our Dahej terminal, and also the efficiency in operations. All because of that, we have been able to perform better in this quarter. One more development which I just want to convey, that our board has approved a petrochemical PDH/PP project of rupees 20,685 crores, and this will be built in the Dahej terminal. And if you see the profitability from this project, the IRR has been very nice, and if you see, around 20% is the project IRR and around 30% is equity IRR. So overall project is good, and company is going to grow in a big way, and this is a diversification which has been done. And most important thing is that we will continue to pay dividends of 100% even through this period of project, because our generation will continue to be of that range, and project will be in debt equity financing mode of 70-30. So that will continue, and major highlight has been that we have got a customer who will buy 250 kT. We have a PDH/PP plant of 750 kTA, out of which 250 kTA has already been tied up with a customer near the Dahej for a period of 15 years, extendable to another 5 years, 20 years. So 250 kT of propylene will be sold to a customer, designated customer, and balance 500 kT of propylene will be converted to PP. Apart from that, we have also tied up with the customers for sale of 11 kT of hydrogen at a very lucrative price. And perhaps this will ring-fence our risk, and perhaps this will mitigate the risk which we can say we have. And if you see, another icing on the cake has been the ethane handling system which we are going to develop along with this PDH/PP plant, whereby we have approved our customers, and two of the customers are almost on the verge of tying up with us for 1200 kT of ethane handling. So this will be purely tolling model, which will be good for company, and there will not be any other risk in this kind of business. So these two business, if you see, will mitigate the risk to a great extent, and otherwise also the spread between propane and propylene and propane and polypropylene is very nice, and perhaps this will take company to a different level in the future. Thank you very much. Now, how to open for the question? Please ask.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Puneet Gulati from HSBC. Please go ahead, sir.
Yeah, thank you so much, and congrats on good numbers. My first question is on the PDH-PP plant. Can you please run down your assumptions on what kind of margins, operating costs are you assuming when you indicate the 20% project IRR and 30% equity IRR?
You want me to run the margins which has been there. See, what has happened actually, we have taken an average of last 7 years propane and propylene prices, which are basically, if you see the pricing is done in India based on Southeast Asia price of this propylene, and we are taking those prices. So 7-year period, what we have calculated, we have removed the unusual year 2021, and otherwise this is all fine. And this has in fact given us a more robust number because prices have eliminated any kind of deficiency which may have. So what we have done, we have taken an average of last 7 years, and if you want to know exact number, although it is appropriate or not, but I need to see whether we can give that. But I would like to mention that it has been done by external agency, and this exercise is carried out by SBI CAPS, and they have taken the number based on the published price of propylene, propane, and polypropylene. So if you exactly want to know the numbers, I will have to sit with you. But I can tell you that these numbers are available in the public domain. Yeah. And almost there is a crack of almost, I can tell you, $400. If you see 7-year average for the propane versus the propylene, and around $600 for polypropylene if you compare propane versus polypropylene. So this is how can I explain you that this is there, and IR is calculated by SBI CAPS after taking into account the current scenario in the market.
And more importantly, the OPEX, would there be any OPEX advantages that you envisage versus the normalized numbers? If you can give some comment there.
Yeah, great. This is Devrat. Actually, today the board has approved this project, and this is a message to all the analysts and investors that we will very shortly do another call with few more details what you are asking about the capex, opex, and the returns, etc. We would like to touch upon this project information today on a high level basis, and go into deeper with the Q2 results. So, but then we will come up with another call very shortly with all the details of the project.
Well, in the meantime, just high level positions which we can just discuss higher depth, higher level assumption which you can just say which are available with us. These are that there will be common jetty for this project. We are going to build another jetty which is in any way was approved by board. So this is not something which is coming in the project. Secondly, many facilities like utilities, they are common, and one important saving has been in terms of cold energy which we are going to utilize in the plant. So this is saving almost 120 crore, 130 crore in terms of power cost, because otherwise we need some cold energy to cool down that particular box where we are storing these material properly. So that way we are saving in terms of energy cost in a big way. But details we will work it out in big manner, and then we will come back to you. But I can say because of synergy with regasification terminal, major OPEX has been very less as compared to any greenfield project where there is higher CAPEX and OPEX as compared to our project.
Right. So thank you so much, and we look forward to the detailed call. But just for the sake of it, initially the plan was 14,000 crores, why has the cost gone up to 20,000 crores?
Actually, I would just like to mention that it was, when it says 40,000 crore, but later on we have also developed one ethane handling facility, which was, in fact, was not envisaged earlier. So around 2,500 crore is that ethane handling system, whereby we will be building one tank, ethane tank, and propane tank is already coming along with this PDH plant. So because of that, and moreover, if you see other costs, there is a soft cost also. If you'd like to see, total hard cost is 16,069 crore only. But there is a provision for inflation, rupee depreciation of 1,900 crore. Some contingencies have been provided, 541 crores. As this IDC, 1,600 crores. Margin money is 400 crores. So 4,600 crores is the soft cost over and above the hard cost of the plant. So that has also been built in this project cost, and that's why it has come to 20,685 crores.
Understood. That's very helpful. And lastly, any update from the customers on payment of user pay for the previous year?
We are still in talks with customers, and shortly they will be coming back with a solution. And payment is still awaited, no doubt. But since we are already talking to them, and we are hoping that solution will come out, maybe in the next quarter you will find that we are able to work it out.
Understood. That's very helpful. Thank you so much, and all the best.
Thank you.
Thank you very much. The next question is from Amit Rustagi from UBS Capital. UBS, go ahead.
Yeah, thank you. Sir, just wanted to understand that you will be doing a broad call, another call to explain us, but I wanted to understand that what is the OPEX, what is the EBITDA, and post-completion of the project. And if you can give it separately by what will be the EBITDA on IPCN facility, on propane to propylene, and PDHPP. And finally, if you're doing something on the propane handling as well, so what are the different numbers of that? So that we know that how much EBITDA is at least subject to the commodity, volatility, and how much is the EBITDA which can remain consistent.
I will just mention, you are asking, so I will give you the numbers slightly. The detail you are asking, breakup of propane handling and ethane handling. As such, these have not been built in the DFR, but we will work out, you can say that calculated number, but we will tell you later because that breakup is not readily available. But one thing I can say you that profitability, you are asking EBITDA and profit. So we have estimated that from the year it will start operating at 100% capacity. The generation of profit will be to the range of 2,000 crores. So it is likely that this will grow, and it will grow up to the project level 7,000 crore of PAT at the end of this year. So initially we can say that 2,000 crore to start with when it is operating at 100% capacity. And EBITDA you are asking is around 4,000 crore. And what else you were asking?
Sir, just the timelines, when you will start commissioning this project, when you start the capex, when is the zero date, and what will be the commissioning timelines?
Commissioning will be almost, you can say, 4 years from now, you can say. 27 end or maybe beginning of 28.
Okay. And sir, in the same breath, do you have an update on Gopalpur project and the other projects which we are doing now? When are we going to see 5 million ton capacity expansion at the Dahej? And when are you going to make a decision on Gopalpur as well?
Yeah, Gopalpur, actually, we have already finalized the documents, and the transaction documents are to be approved by board now again. And after that, we will start on the project, because before finalizing the document and signing the lease agreement with Gopalpur Port Limited, we cannot go ahead. So these documents have been now finalized by our committee. It will go to the board for approval, and thereafter we shall start awarding the jobs for construction of various jetty and other facilities of the project. And further, what we are envisaging is that FSRU, which we require for this project, because we have envisaged an FSRU LNG terminal. Before that, we are going for consultant shortlisting so that we can work out whether there is suitable FSRU available or not, and at the right price or not. That exercise is now being undertaken, and soon we will come to know if there is any FSRU available or not at a reasonable price. If it is not, then perhaps we will go for land-based terminal in later period of the project. Otherwise, also we thought that we'll go for land-based terminal after 4, 5 years, 6 years. But in case availability is poor because of deployment of so many FSRUs in European region, because of import by Europe of LNG. So I think that has to be undertaken, and we'll come back to you with the information.
Okay, sir, just one observation, from the stock price reaction today. So you have seen that investors and markets have not liked this idea of increasing capex to around 21,000 crore. But broadly, you can give them more confidence by maybe slightly increasing the dividend rather than just staying at the similar level of dividend. Because like you mentioned, you are reporting highest ever profit in the first half of this year. And we hope that in the second half of the year, performance remains strong. And with already 7,000 crore of cash in hand, debtors issue getting resolved, I think there should be more reward for the shareholders over next 4 years. I think that only can give them confidence that you are confident about the project. If we start to reduce the dividend, keep it to maybe 10 rupees a share, that will not give a right signal to the shareholders.
Right now, dividend we have maintained, and this is an interim dividend of 7 rupees per share. But of course, your suggestion is well taken, and we'll take care. We'll convey this to our management that we have to maintain the sentiments of the shareholders and keep the dividend high. But at least I can say that whatever we are paying, we will continue to pay, but we'll strive for the higher dividend. And perhaps let us hope that we'll pay. One thing I can say that even after this project, the cash flow is such robust that it will not entice the dividend payment to the shareholders. So this will continue even this period of construction. As you know, we are going for raising the debt from the financial institution or banks. So equity will not be to that extent. Only 30% equity will deploy. And it's not an expenditure which will be done in a single financial year. It will be over a period of almost 4 years. So in a phased manner, this will be done, and accordingly, loan will be raised. And I think there should not be an issue as far as the dividend is concerned in future. We will try to further increase it as far as possible.
Great, sir. Thank you. Wish you all the best and wish you a happy Diwali to your team and yourself.
Thank you, Amit. Thank you very much.
Thank you, sir. Bye. Take care.
Bye.
Thank you very much. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Hi. Good evening. Just on this take or pay arrangement, could you help understand, is it on a cost plus basis or how is the arrangement?
Regarding?
The arrangement with Deepak Phenolics for the 15-year arrangement, is it on cost plus basis, take or pay basis? What all are the tie-ups over there?
Yeah, I will tell you, because this is not cost plus basis. Basically on IPP price plus handling charges plus whatever insurance and GST and other costs. So it is import parity price which we are going to ask from them. So import parity price of propylene will be charged from them. Apart from that, we are also charging $41 as, or maybe whatever number I will let you know later, but handling charges is there. So not only IPP price, but handling charges plus GST and insurance costs, all will be charged. So if you see the crack between propane and propylene, it is handsome as of now, almost $400 per ton. So it will fetch a good price. It will not be a loss thing.
Is there any advance to fund the capex that is being taken from them, given that they are kind of off-takers of the capex?
Advance as such is not there. We will be it's only take or pay basis contract is there with them. If they are not able to take at least 90% of the quantity, then take or pay charges will be levied on them. So it's a kind of like LNG contract.
But even for the take or pay arrangement, there is no advance that you will take from them, because we've seen like take or pay arrangements getting dragged on, and
we are taking this LC will be there, and that will cover take or pay also. 45 days LC will be there, almost.
Okay, sure.
It is 45 days LC will be there. That will cover this use of take or pay also.
Sure. And any specific reason to take a 7-year average? Because like we have seen like off late, generally the crack spreads on petchem have been quite weak, and most of the players are struggling to make any decent IRRs on their investment.
It's a cyclical industry, and if you see the other industry, normally average is taken because it eliminates all uncertainties of any period. So that's why we have taken 7-year period. If you take only this year price, maybe this may be low, but this will not reflect that true picture over a period of time. The 7-year period, in fact, eliminates any kind of abnormalities which may have occurred in this period. So that's why we have taken this. This is taking care of any kind of uncertainties in any period or some cyclic movements. So all those things are eliminated when you take an average of 7 years to 6 years.
Okay, sure. Thanks. I'll come back in the queue.
Thank you.
Thank you very much. The next question is from Mayank Maheshwari from Morgan Stanley. Please go ahead.
Hi, sir. Thank you for the call. 2 questions from my side. First, on the project itself on petrochemicals. Have you kind of done something around the experience of the PDHs in China, and where does Petronet actually kind of stack up better, or any competitive advantage that you have versus anything that you have done in terms of study related to China?
We have not done any comparison with China right now, but in fact, we understand what is happening in China. And in fact, they are running their plant very well. And I don't think we have done any comparison with the plant in China. But in India, we have done all kind of studies in this petchem, this produced PP. And Indian demand supply scenario is fine. If we have got study conducted, there is huge demand in future. And in case we are not going to manufacture it will be imported into India from somewhere. So what we thought that it is the right time that we should enter the business, and the demand in India is going to increase in future. And further, we have already done some kind of assured contracts with the DPL, and they also sold some this hydrogen. So what we are doing, in fact, to great extent, we have mitigated our project risk.
So almost you can say 50% of profitability is assured business in our total project. What I have told you, almost 50% of that will be through assured business with BPL, ethane handling facilities and propane handling facilities. So that is assuring us. And balance 1,000 is there, but that will not be a risk to us. Still, we will be assuring ourselves that at least we are assured that 50% of the profitability will be coming from the assured.
Got it. And so the second question was more related to like the competitiveness of your project versus, let's say, BPCL is starting up around a similar time and some of the others are actually starting up in around 1 or 2 years here and there. So what is the competitiveness of this project that you could kind of highlight to us versus all the others that are coming up in the country?
Yeah. I will say one thing is that we have jetty there, and if you see the real case, it is in Uttarakhand. It is 40-50 kilometers away from jetty. They will have to use a pipeline to bring to their plant. So it is an advantage that it is there, storage facilities there, and the market in the western region are also very good for starting.
Sir, sorry to interrupt you, but could you speak a little closely from the mic because your voice is sounding at a distance.
Just a minute. I just wanted to convey you that we have competitive advantage in terms of two things. One is very obvious that we have our jetty, which is located nearby, and in other cases, it is not the case. They will have to lay pipeline to bring propane from jetty. Like in case of GAIL, which has for its solar plant, they have to bring propane from JNPT, is almost 50 kilometers away. So that is an advantage. Secondly, this is located at a place which is adjacent to our regasification, LNG regasification plant. So we can save in terms of power cost, which is around 120-30 crores, because old energy, which is being wasted so far because there is no usage in LNG plant, we can utilize it for cooling purposes in PDH plant. So that is saving power cost to a great extent, almost more than 120 crores. So second reason is this one. Thirdly, that many utilities are there which are common. So common utilities means there is no additional cost incurred for this PDH-PP plant. So all this have in fact contributed to give us competitive edge over others. And moreover, as I said, that we have attained tie-up with customers which otherwise is not there with other the producers. So that is an advantage. So 3-4 advantages I have told you.
Fair enough, sir. Perfect. Thank you for this.
Yeah.
Thank you very much. The next question is from the line of Maulik Patel from Equirus. Please go ahead.
Yeah, thanks for the opportunity. Sir, anything related to this Qatar contract extension, RasGas? I think earlier you mentioned that by the end of this calendar year, there will be an update on the same.
Yeah, we are still going ahead and target is that only December 2023. So we hope that this will be concluded before that. And discussions are going on continuously.
Just to get an idea, will it be on the same volume or the higher volume? Or will it be more attractive than the current price what we are paying to the Qatar?
We are going for renewal of the contract. Renewal means it's of same quantity of same thing.
Okay.
Right. Part we may negotiate, but otherwise quantity will remain same.
Okay. And will it be more attractive than what it is currently, the Qatar is charging us?
Maulik, attractiveness is a very relative word.
Let's say, is it cheaper than what we are paying today?
That's what I am telling. Although we cannot disclose that part, whether it will be cheaper or the other. But whatever we have seen in the past, the havoc of the spot prices, I think it is also a right time to reward the long-term contracts as well. Mm-hmm. So probably that will do a lot of good to the market, to the industry in the future. But at the same time, the negotiation is going on to get the best deal for the country.
Okay, got it. Thank you.
Thank you very much. The next question is from the line of Kirtan Mehta from BOB Capital Markets. Please go ahead.
Thank you, sir, for giving this opportunity. One more question on the PDH-PP project. Would you be able to share the sensitivity of the IRR to the margin assumption? If the margin assumptions are, say, 20% lower than your base case assumption of $200 on propylene to propane versus propylene and $600 on PP versus propane, how would the IRR change?
Sensitivity, actually, if you want, we will have to present to you, I think, personally, we will have to arrange separately because these things cannot be explained in such a manner. And perhaps you are asking for sensitivity, so we will show it separately, how we have done it. We have done on all fronts what kind of risk should be there. All those have been analyzed. And as I have said you clearly, that SBI CAPS has prepared our this report, financial analysis report, and they have considered almost sensitivity analysis of 11 scenarios, which include increase in product cost by 10% and 5% decrease in product price. All those kind of things have been done. So, and definitely project will vary in each case. So it has to be. So we have done all kind of things. There is a increase in capex, in project cost, that has been analyzed. There is any decrease in capacity utilization, that has been analyzed. Increase in OPEX by 10%. All those things have been analyzed. But these things cannot be explained over phone like this. So we will have to make a visual presentation on that. If you want, we will display all those things to you. But right now I can tell you that those things have been taken care of. And SBI CAPS has done all the sensitivity analysis. And after that only we have taken a conscious call. Yeah, to add to that, let us also plan for another call or something. We have to plan which mode, whether a telecall or a kind of a Microsoft Teams can also be like that. So that will make a presentation also if you need. But it will be only specific PDH-PP only. Rest other things will be covered here, so that it will be the sole question which will be remaining to be further explained to the market. Is it okay?
Sure. Just one more question on the Dahej expansion which is underway. Could you tell us about the project progress across different modules and the current expectation of the target date?
This expansion of Dahej terminal is in fact going on, and our target is almost March 2025. It should be ready, expansion. So April, May 2025, it should be operational. So this is how we are going ahead, and total capex, is very low. It's a low-hanging fruit, only 570 crores total, from 17.5 to 22.5 MMTPA. So this is on time, and as I said that both the phases from 17, this is in two phases, from 17.5 to 20 MMTPA and 20 to 22.5. So both will be completed by March 25. So after that, it will be ready for operation.
Fine, sir. Thank you.
Thank you.
Thank you very much. The next question is from the line of Sanat Kumar from Value Research. Please go ahead, sir.
Yeah. Can you hear me?
Yeah, please.
Okay.
Continue.
Thanks. Okay. So first of all, thanks for providing me this opportunity. I have only two questions. One is, what has been the regasification tariff, in last 2 years? And the second question is the LNG price. Have you seen any hardening of the spot and short-term LNG between the 2 quarters this year?
As such, there is no hardening of the prices, as you are telling. And regasification charge, I should tell you, Grace Terminal, we are charging 59.91 per MMBTU. And for Kochi, we are charging almost 85.09 per MMBTU. So this is the tariff for Dahej and Kochi. And as far as the hardening of the LNG prices is concerned, the spot market is little bit volatile now, but it is around $15 almost. But otherwise, long-term prices, which we are buying from Qatar, is around $12. So this is how prices are there. And they are likely to remain so in the next, I think, it may go, maximum winter season, it may go up to $17, $18, not more than that. This is our anticipation. And this is also anticipation of the market. They are also not anticipating too much of volatility in energy prices in winter season, because Europe has already accumulated more than 98% of the inventory. So there will not be any panic buying by European countries in this winter season. So keeping that in view, we hope that prices will remain like this from $15 to $17, $18 maximum up to winter season.
Okay. And the last question is basically related to the fact that the demand for polypropylene and all those things that we are coming up with, do you see a very healthy uptake in demand in, say, next 7 years, or is it going to be on an average which we have been seeing in India for the last 5 years?
It is going to be uptake because we have analyzed everything, that how many plants are going to come up in the next 5-year, 10-year period, and what is the demand it is going to be. Entire analysis has been conducted by a consultant, and he has shown in the consultant. We'll cover this in the presentation later, whenever we are putting all these details. But there is a shortfall still as compared to the demand in terms of supply. So keeping that in view, we have taken this conscious call, because these are the questions normally is raised by members in the board also. And we have explained it very well that a study has been conducted, and in India there is an uptick in the demand in the time to come, and compared to the demand, the supply part is lacking. So even if you bring this plant, still there is a shortfall in terms of meeting the demand. So this is how we have, but we will cover this in presentation. We will make for this a special presentation for PDH-PP plant later sometime after informing all of you. And this will be shown to you there, that what is the demand perspective in the next 5 to 10 years of PDH, this PP mainly.
Okay. Thank you very much. Thank you very much.
Thanks.
Thank you very much. The next question is from the line of Niharika from Equitas Investment. Please go ahead.
Hi, thank you for the opportunity. What has been the regas revenue for the quarter?
Yes, the regas revenue has been 598 crores.
598 crores. Okay. An update on the storage tanks of Dahej as well as Kochi.
Kochi, there is no storage tank construction right now, but at Dahej it is in full swing and on target.
So we're planning to finish it by September 24, right? The tanks?
Before that, it will be completed. Before that, by June, I think it should be completed next year.
Okay. And so I just read an article that